This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th, Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. And it is Thursday. We are seeing some green arrows around the world. You actually have Asia broadly higher, even though they devalued the yuan for the third day. So maybe the markets in the world is pricing it in, and that noise is getting a little lower. And you have Europe bouncing back. I know the last 2 days in the DAX was, pretty harsh to the downside, down almost 5.5%, and now it's up about 2%. So if you look at the chart of the HEDJ, you'll see that, it's been choppy. It's the whole market's been choppy. But anyway, yesterday it did put in a hammer bottom at the 200-day. So, I think most of us got stopped out here. If you re-entered for a trade, perhaps there's room to fill this gap up to about 60. What is that? 63.60. Okay, so we'll see what happens then thereafter. But as of now, it's it's still very choppy, and if you have tight stops, you're probably getting out of your stuff a little earlier. If you're a little looser, or if you did get stopped out here, maybe you bought back yesterday, and now you get paid a little bit, and we'll see if it builds or not. And that's the big question: will it build or not? How long or how much longer do we stay in this range? The S&P's been in a range now for almost 7 months. I think it's the tightest range people are talking about in decades. But at least this week, what's been better to see is that, just say on Tuesday, we closed on our lows. So if you happen to have been, short overnight, which some traders do, you got paid on Wednesday into yesterday's down open. And then yesterday, we had a big down open with a major reversal, closed strong. So the good book would say, whatever you took on tactically with the red dog reversal, hold the third, and if you did so, the futures are up, 5-6 handles, so you're getting a little follow through. So at least whether we resolve this range or not, a little less misdirectional moves and a little bit of things that make a bit more sense. So if you go to the SPX, you will see, this range is still intact. It's been here for a long time now, and pretty crazy. This is the low end of the range, okay, which we almost touched yesterday. I put the chart in on Twitter of the support zone 1 and then support zone 2, traded below it and then came back above it. That is your red dog reversal, which everyone who watches me knows pretty well. So if you chose these two pivots as your spot, when it broke below 2063 to 2067, maybe you got short looking for follow through to the weakness from Tuesday. But then once it hit the bigger support zone or near it and reversed, some guys would actually be long this pivot with a stop at the low of the day, made good intraday money, and then took some home long. So now the question is, up 5-6 handles, what do you do? Do you sell it, or do you buy it, or do you short it? I would say into this spot, 209, 2094-ish or 2100-ish. Let's see what happens here. I think if you're long from yesterday, I would definitely trim some. I've already, I usually trim a third before I come into even the morning call and then see how it lasts. And if you're looking for a cute short, this would be your spot to short against, especially considering the size of this travel range. So, that would be resistance right around there. And if you take a quick look at the spiders, because a lot of people do trade the spiders, you'll see that, that little descending channel that's getting very defined here, comes in, resistance comes a little bit closer to this 210 area, which, which it's almost at, like right now, I think it's like 209.75. So I would like to see you maybe sell some, but hold some because, you know, these type of reversals, you know, they do sometimes lead to a swing bottom. But again, that remains to be seen. We've seen this many different times here. So, you know, let the market prove it's more than that. You know, yesterday we did get the reversal that started with tech, you know, which is always good to see, and the bios. In tech, Apple was the one that I focused on because it got hit early. So, you know, they flushed out people below the pivot that we were talking about at 112.10. I actually shorted it first, you know, people on the VTF saw. And then, as the market was making lows and after it snapped back, there was buyers in there showing relative strength. And then when it reclaimed 112.10, you know, I did go long. And, you know, I think a lot of the VTF did, and that's what helped lead the market up. So now the question is, you know, how does Apple look? Well, technically, it's still somewhat broken. Technically, if you know, got out of your Apple long when it broke this 122 because this range broke to the downside, you know, you've been able to play this, you know, this lower area. You know, this channel has been long in the tooth, and, you know, this gap down after earnings probably got people away from it tactically if you actively trade, and then maybe even short there. So with that being said, you know, you take a closer look here, you know, at Apple, and you'll see, wait, hold on, let me just show this like this. You'll see that, you know, the last time we had a red dog reversal, you know, it you know, went as high as, what is this, 1999. So this one is a little bit bigger and probably stopped more people out. So the question is, you know, what does it do into this area? So I am long some Apple. I trimmed a little bit around 116-ish before I came in here, and I'm going to try and hold some because I do think, you know, there's the opportunity of it, you know, coming back into this, you know, 117.5, 118, and then at some point it'll figure out, does it want to reclaim the 200-day and look better, or are we just two-way trades here, tactically approaching it, which is better than what was going on in this range, because this range was, you know, very tricky and lethargic and didn't make much sense. So we'll see what happens with Apple. So Apple did help lead, you know, the cues in technology. Now you have Cisco, you know, pretty decent after hours. It's up, you know, 4% today, so that's what's also helped giving a lift to the markets. You know, the bios, which, you know, have shown a little relative weakness, you know, they reversed yesterday, and they gave you, you know, a really nice trade around this 361 pivot. If you read my note every day, which I have as a product of Redler All Access, I listed 361 as a pivot. Said, see what happens at that area. We could break below, but if we come back up, perhaps, you know, there's a trade there. And if you know, got back in around 361, it closed near 370. That's $9 in the IBB. So now the question is, you know, what does it do here? It's opening up a little bit. You know, we've been talking about how this, you know, little trend here has broken when it broke below the 50-day. Okay, you had a retest of it. So now, what does it do there? So with that being said, you know, I think for composure purposes, you know, it'll be interesting to see what the IBB does. It reversed here, so it's opening up a little bit. If you got long there, big travel range, you know, I would definitely be trimming here. And for some people who think, you know, it's just an oversold bounce, you know, maybe start shorting between 373 and 376. But if we open up today and it doesn't sell off and go sideways a little bit, chances are, you know, the market wants to hang in there. You know, maybe the bios, you know, get back into vogue. But, you know, we're going to need some leadership groups. So we need to see what these type of groups do the next day or so. Was it just a bounce and just a trade, or does it, you know, add to more? Two other sectors that have been a headwind that helped yesterday was some of the oil names, and we started talking about them last Thursday on their outside day, just for a counter trend trade. The XLE, the XOP, and they were the first ones to go green yesterday and had a nice push. You look at the XLE, you know, I don't think it's going to be a blockbuster move, but, you know, we've shown you this sector many times, and listen, you know, if you follow our rules, when you broke the 8 and 21 day here, you know, and with this head and shoulders top, you probably sold this group or maybe even got short. If you didn't do it there, when it broke below the 200 day, we talk about how groups are uninvestable. And then boom. So all the way down here, you know, someone else's trash could be your treasure. And you did have this small outside day here, or reversal, never made a new low, and then just gave you 3 days to the upside. So we'll see what's next. It's got to hold this 69 area, you know, to stay, you know, in the game. Maybe if it opens up today, some cute guys might try and short it, but it's the first time it's taking the 21 day back in multiple months, so maybe it's acting better, and the XOP is the same. But these are just counter trend trades for cash flow, and sometimes create new trends. But for that to happen, you have to make a series of higher lows. So, you know, we'll see what's up there. This also took back the 21 day for the first time, and, you know, this too, you know, just to show you, so you learn, you know, a lot of people, when sectors change and money rotates out, you could spot it when things break the 200-day moving average. We look at it when it breaks the 8 and 21-day, but institutions more or less use it at the 200-day, and that's what happened right there way back in the day in the XOP. And look at that also, head and shoulders pattern. So, check out that pattern. If you see that happen after a group has distribution for a while, you better get out of the way, especially if the 200-day is right near the neckline, and then pow. So all we've had so far is this small bounce, and I guess, looking at the chart this way, there is some room, to this spot before, perhaps sellers come back in, or sometimes, they even push the envelope a little bit more and go higher, but that's around 43. So, the question is, what charts look awesome? And there really aren't any. So the market needs time to rebuild, so there are just these tactical trades. But there are a group of strong stocks that are still in the game that you could watch and trade and figure out if they'll get traction at some point. And in high beta tech, it's still, you still have pretty much Netflix, which was quiet yesterday, best in breed. Okay, it's been in a very strong uptrend above the 8 and 21-day. Yesterday was quiet. At some point, perhaps it tries to clear this descending channel, at some point, which would be above 124. So if you are long it, be long versus yesterday's low of 118.86. Last time it did had a descending channel here, it broke to the upside like that and gave you a nice move. I'm not sure how much longer it needs to last. Does it have to touch the 21-day? I don't know, but it's getting tight again, so it's worth noting. As far as Google and Amazon, they've been just hard to trade. Yesterday they actually had some decent trading in Amazon, and Google continues to confuse people. But anyway, Google, you look at the chart, very hard from an active trading standpoint. You had your gap up, looked like it was going to break out and failed, came in, and then it held the gap, but looked like it was going to break out here, came back in, looked like, I remember that day, it was down a few bucks before the news of the alphabet, and now here you are as you have another gap. But intraday, it's very hard. You definitely have been not rewarded for buying strength intraday, but maybe at some point, if it were to take out this 704, it would show you the market has some power and maybe some follow through. But as of now, I wouldn't be jumping out of my skin to be a buyer above something like that. But watch to see if it happens. Amazon traded into the gap and reversed. Nice little red dog reversal right there. You're getting rewarded for these type of things, buying weakness and using pivots versus trying to buy like we did that day at 540 before it failed. So I guess on a micro level here, see if it can get above this 527. But overall, it's taken its sweet time to rebuild here. But overall, above the 21-day moving average. You saw the S&P take out the 200-day before reclaiming it, so that is a spot of relative strength. In social media, you still have Facebook. Facebook. I could talk. Facebook. Take out that pivot, which we talked about, 91.80, and then it reclaimed it. So nice little red dog reversal there. Not sure how long it's going to take to work through and create an upper channel, but overall, nice little tactic yesterday, up a little bit today. At some point, maybe there'll be like a descending channel within here, to resolve to the upside. I'm just not sure when. If you look at the last time we've been watching Facebook, when it had that last earnings report, it had that breakout failure, and then just took a long time. Took almost 3-4 months before creating a better, type of channel here to go to the upside. So we'll see what happens here again. Twitter is trying to be a little relevant again, a little. Okay, you had that first move, and then it wound up holding higher. So if there's another tactical trade here, maybe above 30, you could see something a little bit closer to 30 to 150. But again, very, very micro here on Twitter. It's very broken. I did buy some calls into this spot, which we talked about, and that's so I don't have to trade the day-to-day noise there. We'll see what happens there for September 18th in the 30s, but I bought it somewhere around there. And then as far as some one-offs, SHAK wound up announcing a secondary. There was talk of $60. 60 bucks is what it was. Question is, with it at 62 this morning, is there a trade there, or will it be too heavy? So it did have earnings, and it was as high as almost, what was the high here? The high here was 75. So with it down near 60 as a trade, maybe it's worth a look, where I think it was 61 before I came in here. So we'll see if it holds that. If it holds price here, that could be a good day trade for today. Another one-off, we were talking about SUNE. SUNE has been battered and bruised and, got crushed. It's up a little bit this morning. Some of us did go long, and I'm actually long it on this red dog reversal because there was volume. If it could clear this little descending channel, perhaps over the next few sessions it tries to get to 1740, but it's a broken stock and a broken, group, so you better just be very, very careful. It's the first time that I really tried it, so maybe there's a trade there. They also had some news. As far as the banks, we talked about the 200-day in Goldman Sachs. It held it. So, with that being said, maybe, you bought the dip here because Goldman Sachs, it's always hard to get at the 200-day, but it's still somewhat broken. This trend is all the way up here. Remember that false breakout right there that led to the weakness. But anyway, I don't know. Maybe there's a trade back to here, but overall the banks have lost some momentum because people are thinking now September is not going to be liftoff. It might be December. So we shall see. We shall see now that, China's rallying and maybe the yuan stop, going down, that the liftoff talks could resurface. We'll see. So all in all, it's Thursday. There's been a lot of volatility. At least it's been a little bit better volatility where, markets close on lows, open down the next day. Close on highs yesterday, open up a little bit. You're getting some moves in some of the key stocks that are rebuilding. I don't know if we're going to have any kind of resolution, and I wouldn't be trading like that. If you have a long-term plan, stick to it. You'll get through this. If you trade actively, don't get overly frustrated and overdo it, because there are setups that do show themselves, but if you don't take just the A setups, the B and the C and the D ones could wear you out. So for today, a little bit of upside follow through. I would trim and trail a little bit. If you want a cute short, maybe use a short into some of those resistance areas that I just shown you. But if we all of a sudden get power, don't be what's it called, a stubborn short, and just roll it up, because who knows, anything could happen in this market. TLTs to end on did reverse yesterday. Talked about in the morning, saying what could give us some signals of potential equity strength, and that would be a reversal in the TLTs, which you have here, red dog reversal around this 125.13 pivot. So see what happens here. It's been following the 8-day moving average ever since clearing this 119 area. So see if it holds again. If it doesn't hold again, maybe that tells you that the rally in the overall market could continue, and then you could look to see what happens here a little bit closer to the 21-day. And that, my friends, is the morning call. I might see it to recap, and if not, I will see you back on Monday morning, but I'll be on the VTF and I'll be pretty active on Twitter. Have a good one.